The market's attention will shift to the euro this week with the highly anticipated September monetary policy meeting for the ECB. Now, we're going to do things slightly different in this week's video, so stay tuned not to miss out on anything. Hi guys, Arnie here from Forex Source, where we teach you to trade and understand the Forex markets better. Now, on this channel, we focus on delivering high quality educational trading content that specializes in fundamental analysis. So make sure to subscribe so that you're always notified whenever we release new videos. Welcome to another week ahead video. Now, in this week's video, we're going to do things slightly different than usual. For the last month or so, we've been working very closely with a lot of our subscribers within the Forex Source terminal. And we've developed a simple, easy, but effective 3-step analysis process. Now, this 3-step analysis process is very easy to remember, and it's something that you can use to apply to your analysis for any currency or upcoming event. So it's really something that you guys can use in your own trading and in your own research as well. Now, we really care about what you guys think of the videos and the content. So I'll really appreciate it if you guys can let us know in the comments after the video whether you like this new 3-step process. So without further ado, let's jump into the video and see what this is all about. Okay guys, now as we explained, this week we're going to introduce to you our new 3-step analysis process, and we're just quickly going to run through these steps. The first step will be to find the current baseline and context for the relevant currency. Now in this case we know it's going to be the euro. Step 2 will be to find the current baseline and context for the upcoming risk event. In this case we know it's going to be the ECB meeting. And then the step 3 will be to establish the possible triggers or catalysts that can cause a significant shift in the current market expectations. So let's quickly, to start, just jump to the calendar. And if we just quickly run through the calendar for this week, we can see that the event that we're going to be focusing on will be Thursday. Now we can see the calendar is not extremely busy this week, but we'll be specifically focusing on Thursday with the ECB rate decision and statement. And then of course the press conference that'll be 45 minutes after the statement and the rate decision. So now to quickly jump to step number 1, we need to find the current baseline and context for the relevant currency. Now, we know we're going to be focusing on the euro and the ECB rate decision for this week. So now we can start with this step 1 and find the current baseline and context. Now, one area where Forex Source is way different than any other type of news feed out there is with all the added analysis and commentary that we include. Now, whether that is from our daily live webinars or from our written research, the goal with all of this is to make your life as a trader as easy as possible by providing you with all of the information that you need. Now, to find the baseline, for example, for the euro, we can just simply jump to the Forex Source terminal now. Let's quickly do that. And from in the Forex Source terminal, we can go to the currency research tab. And in this section, we have a report called the fundamental drivers report. Now we can just quickly open up that report. Now this report basically gives you the baseline or the rundown for all the current baseline expectations or context for each of the major currencies, as well as the current bias that we have for it. So let's just quickly jump to the euro and we can quickly take a look. Now you can see that our current baseline bias for the euro is bearish, and the reason for this is the outlook for the European economy remains bleak. We can see that Q2 GDP was confirmed at 0.2 for the quarter, half of quarter 1 0.4%. Now which equally concerning, guys, is that of the 19 nations bloc, Germany, which is obviously the strongest economy, makes up 20% of the EU's total GDP, was very weak, actually contracting in the second quarter by 0.1%. So they are actually facing a technical recession at the moment. Now, we also have subdued inflation, which is a concern with inflation expectations falling drastically in 2019. So weaker than expected inflation, as well as the slowing economy, continues to reinforce the market's expectations for the ECB easing at their September meeting, which is obviously this week. Now we can see, according to a Reuters poll, the market consensus is once again for a 10 basis point cut. However, numerous investment banks are calling for a 20 basis point cut, with some also looking for a reinstatement of quantitative easing. Now, with a bleak economic outlook and the ECB expected to once again enter an easy cycle, Euro's outlook remains bearish. Okay, so now we have established the baseline expectation for the euro. We know it's bearish, and the reason we have this expectation on the euro is all of this information right over here. Okay, so now we can quickly jump back to our step number 2, and that is to find the current baseline and context for the upcoming risk event that we're interested in. Now we know that is going to be the ECB meeting. So for that, we can quickly jump back to our terminal, and within the terminal we have a report called Week Ahead, Week in Focus. Now, if we just quickly open up this report just basically gives us a rundown of all of the important events that is in every trading week. Now, the one we're going to be focusing on, of course, is the ECB preview. Now, what's important is this will give us the baseline expectation for what the markets are expecting going into this event. We know that the ECB has been doing a little bit of research. The Governing Council has tasked relevant committees to find ways on how they can introduce a new stimulative package for the economy. There's a lot of things that happened after the previous meeting. We had ECB's REN coming out saying things like the ECB needs to deliver a significant and meaningful easing package. Now, apart from that, we also had a few hawkish comments from a few of the more hawkish members. So over here we knew that Klaas not from the Netherlands suggested that there's no need to resume QE at the present time. And we also had Germany's Lautenschlager coming out saying that it is much too early for a huge package. Now, the thing that we need to note about these two members, which is Klaas Nod as well as Lautenschlager, is that these two are known hawks within the ECB. So we expected them, or would expect them, to say hawkish things, where if we compare that to something like Olli Rehn, now Rehn was considered a neutral member of the ECB, and these comments that he made regarding a significant and meaningful easing package actually placed him or changed him from a more neutral member to a more dovish member. So it does look like the majority of the Governing Council is leaning to a more dovish tilt. So that's just something important to note about these recent dovish and hawkish comments. Now, going into this event, as we said, a lot of the investment banks are expecting a restart in the QE program. Now, if we just have a look here, we can see policymakers believe that they have room for around 1 year of QE. Now, for that reason, a lot of investment banks are expecting a 12-month restart of the quantitative easing program. Now, the amount that they are expecting per month varies quite significantly. Some expect it to be 15 billion all the way up to 60 billion. So the banks are a little bit divided on the exact amount, but they are expecting some form of restart of the QE. And we can also see the markets are now fully pricing in a 10 basis point rate cut for this meeting, with just under a 50% chance of a deeper cut of 20 basis points. Now, we can see of 70 economists polled by Reuters, around a quarter of them are looking for a 20 basis point cut reduction in the deposit rate. So if we just quickly summarize this, the markets are expecting a 10 basis point cut this week, but a quarter of the analysts are expecting a 20 basis point cut, and the majority of participants do expect to see some form of a restart of the QE for another 12 months, but they are divided on the amount. Now, another important point made by both Danske Bank and Nordea is that inflation expectations is very low, and they've been falling throughout 2019, and that should be a real cause of concern for the ECB. And as such, these two investment banks believe that the ECB cannot really afford not to implement an extensive easing measure at this stage. So it'll be very important for us to obviously see what type of rate cut the ECB delivers. Also read through that statement carefully. But what will be very important, guys, is we need to make sure and take care of the volatility that can happen from the press conference. The statement is obviously one thing and the rate cut is one thing, but 45 minutes after that, we do have that press conference, and that can cause a lot of volatility because we don't really know what type of questions the interviewers will ask the ECB, and we don't know how the ECB will respond to that. So that is something that we just need to take care of for this week's event. Now, let's quickly jump to step 3 then, and that is to establish the possible triggers or catalysts that can cause a significant shift in the current sentiment. Now, the baseline, let's look at the first one. The first trigger is that the baseline expectations for this event is that the ECB will cut rates. That's not a surprise. And there's also that baseline expectation of a restart of QE, but obviously the amount is still, the guys are still divided on the amount. Now, this means if the ECB comes out exactly as expected, which means a 10 basis point rate cut and let's say maybe a 30 billion reinstatement of QE for another 12 months, it is possible that we might see some form of a buy the rumor, sell the fact reaction from this, and that can can actually cause a short-term rally in the euro, but we need to be very careful of this scenario because what is said in the statement, we need to pay very close attention to that. If they come out exactly as expected, but they clearly signal that they will implement an extensive easing package, including rate cuts and restart of QE and other additional measures from let's say from December, from the next meeting, that could really see the euro sell off, even if they come out exactly as expected. So if they come out as expected, but they say, listen, this is not the end, this is only the start, we're going to cut even more, we're going to introduce even more QE. If they say that, then even if they do come out as expected, that additional statement can actually be very important, and we can see the euro sell off from that. So don't only just look at the actual rate decision and the actual QE if it is restarted. Also see what they say about going forward. That forward guidance will be important. Now, the second trigger, which will be the best case scenario for a very positive shift in the sentiment on the euro, will be if the ECB comes out this week and decides not to cut rates. They decide not to introduce any new policy initiatives at the meeting, and they say that they are still going to wait for more data before they make any decisions. Now, this could provide a very good short-term buying opportunity on the euro, but that is a very unlikely event for this week. But that will be the best case scenario for a very drastic positive sentiment shift on the euro. Now, the third trigger, the best case scenario for a negative sentiment shift, will be if the ECB decides to cut rates, but they do so by more than 20 basis points. So let's say they cut by 30 or 40 basis points cut, or if they do cut by 20 and they signal that this is only the start, they will need to cut even more. And also if they introduce a restart of the QE by, let's say, bigger than 60 billion per month. So let's say they're going to restart QE with 80 billion per month, or even if they restarted with 30, but they say they're going to increase it every month until they reach 80 or 90 billion. That would surpass the market's current dovish expectations and could provide us with a good selling opportunity on the euro this week. Now, if we do see the ECB come out exactly as expected, but we see that promise of additional measures being introduced from the next meeting, or they come out, cutting more than the markets are expecting, introducing more QE than the markets are expecting. If they come out with that overly dovish expectations, we can look to pair the euro with something like the yen. The reason why we like the yen as a bullish currency is because of the continuous challenges in the global economy, as well as the continuous struggle between US and China trade war issues. So that has really supported the yen in recent weeks, and we expect that to continue as long as the challenges remain on the global economy and as long as we have the issues with the US-China trade war. So we would look to pair the euro against something like the yen if the ECB does come out and deliver that overly dovish or more dovish than expected easing package this week. Right, so jumping to the charts, you guys will know that normally we just use a simple Fibonacci retracement to look for possible areas of interest for possible long or short trade ideas. Now, something that you guys will notice from the chart is that we've removed the 38.2, the 60, 62, as well as the other levels, and we've only gone with the 50% fib level. Now, there is no magic sauce around this. There's no, hidden secret about this. We just want to make things really as simple as possible for everybody. So we're only going to look for a 50% retracement with all of the trade ideas that we're going to be looking at. That doesn't mean that if the market gets to a 38 or a 62 or whatever, that you guys shouldn't take it. This is really just to keep things very simple. So we're only going to be focusing on that 50% retrace and basically trade it as a 50% discount on a move that we are expecting to happen. Okay, so with that in mind, let's have a look here at the euro yen. We've basically just drawn in our fib from the recent swing high here close to the 121 level to the recent swing low close to the 116. Now, if we just have a look at the 50% fib level, we can see that this area between the 118.50 and the 119 looks like an interesting area in terms of a possible shorting opportunity. We can see that the pair actually did move into this zone on last week, week. So this is an interesting zone we can look at. Obviously, we'll need to reevaluate what the chart looks like by Thursday when we have the ECB meeting. Obviously, a big risk to any yen trade would be drastic changes in the risk sentiment. If we see any positive changes in risk sentiment, obviously that'll push the euro yen higher. And if we see drastic positive changes in the US-China trade war, let's say they announce a deal or something like that, or they're close to a deal, if any major positive changes happen, that will obviously invalidate any trade that we want to take long on the yen. Now, otherwise, if nothing changes in terms of the risk and the risk still stays shaky, then obviously that would be a good opportunity for us to look for a short on the euro yen in this overall area. Now, in terms of a stop loss, the best case scenario for a stop would be above this recent swing, which will place it just above the 120-150 level. And in terms of a target, we can look to this most recent fair value area at the 116. A move down into this area could provide us with a good opportunity to look for a potential profit target on the pair. Now, something that is important just to note, guys, on the euro specifically, is if we have a look at, let's say, just the daily chart, we can see that the euro has really been falling, and it's not only against the yen, it's against a majority of the currencies out there. The one thing that is important is we don't specifically look at something like the COT data, but you don't need to look at the COT data to know that the market has a very short position on the euro at the moment. There's a lot of short positioning. So the thing that's important about this is it doesn't mean that just because the market is extremely short in the euro that it can't go even lower. The market can always go lower, even though the market is very short on the euro. If we see a dovish enough reaction from the ECB, obviously that'll push the euro lower. One thing that is important though is that given the extreme positioning, it'll take a lot more and more negative news on the euro for the euro to push down significantly lower, if that makes sense. So we've seen this in the recent data. A couple of months back, if we traded something like the PMI data, if we had a big miss, we had an extensive, significant sell-off on the euro. And what we've seen in recent weeks is, even though we've had important misses on the PMI data, we haven't really seen that follow through in short moves in the euro from that data. So that shows us that the market is really already extremely short on the euro. And this just basically means that we do need to take care of significant levels as the pair moves lower. We don't really want to be selling, right at the lows over here. So we want to see some form of a pullback and then trading that down lower. What's also important to note, guys, is that if the ECB, doesn't come out as dovish as the markets are expecting, any type of hawkish, or let's say just less dovish than expected reaction can possibly have a much bigger move in the euro because of that extreme short positioning. Now, that doesn't mean that everybody's going to quickly, start to buy the euro. It just might mean that some of these players that have shorted the market from these levels can start to unwind some of those positions, and that can actually see the euro rally a lot higher than we might see it sell off. So just take note that when a pair or any currency is at extreme highs or extreme lows, we also do need to take note of that and know that if we do expect the euro to go even lower, it'll take more and more and more bad news to push it down significantly lower. So that's just something that I wanted to add on that in terms of extreme positioning on currencies, on pairs, and I hope that information can help you guys out. Guys, thanks for watching. Now, if the content and video was helpful, please let us know by clicking the like and the share button to show YouTube that it's worth sharing, and we'll see you guys in the next video. Cheers.